Welcome back, traders and investors. We have Gregg Greenberg on the line, and he is a writer for TheStreet. Before joining TheStreet, Gregg was a writer and producer, a segment producer for CNBC's Closing Bell. He previously worked at FleetBoston and Lehman Brothers in their private client services division, covering high net worth individuals and mid-size hedge funds. And Gregg, last time we talked to you, weren't you working on a movie?
Actually, yeah. Friends and Romans. We actually had a screening for investors and some of the stars last week. It went really well. And we're looking forward to the film festival season coming up. Tony Sirico's in it, Michael Rispoli, Annabella Shora. So it's looking pretty good so far.
Oh, so you're out of the production and you're into showing in it. And you want to tell us a little bit what it's about?
It's in the can, as they say in the business, in the film business, that it is. Yes, actually, it's about these two actors that were always background actors in mob comedies and mob movies and mob TV shows like Sopranos, and they want to prove that they can act, so they stage Julius Caesar at a theater in Staten Island, and a real FBI agent joins the cast, and a real mobster joins the cast, and hilarity ensues, and it's a great script, won a lot of awards at film festivals. Finally got it produced by Michael Mailer Films, and we're waiting to hear from the film festival, so where we're going to premiere, whether it be in Toronto or Telluride. Either way, we made the movie, and it's a great movie, so hopefully everyone will be able to see it either in theaters or on Netflix or however you watch your movies nowadays later this year.
Right, or on your iPad or whatever. How long did it take you to write it?
Well, actually, I wrote the script back in 2008. It's not easy getting a movie made, so you just got to keep knocking on doors. And, like most other journalists, you got to have a dream or a novel or a screenplay or something in your desk drawer to keep you sane, because all of us journalists are overeducated and underpaid. So that was mine, and you just keep pushing, and finally, if you have something of quality, it will get made, but you got to keep pushing.
And so it's comedy? I mean, would you classify as that, or is it more serious?
Yeah, it's a very smart mob comedy. So we interplay Julius Caesar and Guys and Dolls and Sopranos. So it's the kind of movie that, frankly, people just don't make anymore because they're too busy making vampire movies and Guardians of the Galaxy, although that movie did very well, and it's just not my type of thing. But it's something that people can actually enjoy. It's also a family movie. It's rated PG,
Really?
so you can actually bring the kids.
Okay, all right. Well, we'll have, when we have you on again, hopefully that'll be on the marquee at the local theaters here, and something looking forward to seeing. Congratulations!
Well, thank you. Friends and Romans, everybody. Friends and Romans.
Yeah, looking forward to it. So moving on to the markets here, in real life, you're writing on the market. What have you been writing about this week?
Well, I've been speaking to a lot of high-yield fund managers. People are worried about high yield being the next bubble to burst if and when the Fed moves to hike rates, and some people think they're going to move a little bit earlier because of these good jobs numbers we got. So there's a lot of worry about high yield cracking, and it has cracked, but the yield is still really low on high yield. You're looking at about 6% on some of the high-yield ETFs, which is not getting paid a lot for what a lot of people view as the equity component, as an equity type investment, especially when it was about 20% in 2008, or maybe 10% just a few years ago. So you're not getting paid a lot in high yield, and it's selling off quickly. So a lot of people view that as the canary in the coal mine. So I've been speaking a lot about that. And also, if you look at the VIX has stepped up to around 17. So some people are playing volatility a little bit more nowadays.
And, I mean, it definitely, we've had a nice pullback, coming off the highs here. And, you've been writing for a while. You feel, investor sentiment. And, it just doesn't seem like people just want to let go of buy the dip mentality from the people that, you're dealing with and writing about and interviewing. People are just still viewing this as just a healthy correction, or some of the people, looking at this a little bit deeper?
Well, there's different components out there. When you say investors, you talk about the people at home, and the people at home, I think to a certain extent, have given up on individual names in the market. So when you speak to individual RIAs, registered reps, they're just putting their clients into ETFs and mutual funds because they're not individual stock picking anymore. They don't want to get burned. They've been burned by the tech bubble, then they got burned by the housing bubble. So they're just putting their money in wrap accounts and ETFs. So it's hard being a stock picker nowadays because no one wants to get burned by individual stocks. That said, I do interview a whole lot of mutual fund managers, and when you look at earnings season, you look at some of the large cap tech, and that's done fairly well. Microsoft, Cisco, remember Cisco? Yeah, well, that's also done well year to date. Intel has done pretty well year to date. So that's been some of the positives of earnings season. But then when you think about this past earnings season, people are going to forget it because they're going to remember Ebola, Gaza, and the Ukraine. So this whole, all-important earnings season has basically been forgotten because it's been overtaken by international news.
Right, and the international news is definitely giving a boost to the gold market here. We're trading up $22 at 1307.30. That the news with Russia lining up there to invade Ukraine is shaking the markets and giving a bid to the gold market.
I guess. I don't know. I mean, if let's look at the GLD year to date. I think it's been fairly flat. I mean, it's having a hard time getting through that 1300 level, and it's been fairly flat over the last 4 or 5 months. But it's even with all this geopolitical worry, people aren't looking at gold. People are just kind of burnt out, if you ask me. They're not looking at gold. People are not making a lot of speculative plays. And now maybe it's just summer. Maybe it'll pick up in September, but it's been fairly flat. Dow is down 1% for the year. S&P's up 4% for the year so far. NASDAQ's still up because you still have a lot of people having fun with biotech, like you saw in Puma. So I mean, there's things going on, but only the people like the crazy people like me who are watching the market every day are paying attention. Everyone else is really at the beach or is just giving up on individual stocks altogether.
We had Jeffrey Hirsch on last week, and he's the author of the Stock Traders Almanac, and he
love Jeff Hirsch. You need that almanac.
Okay, a little plug for Jeff.
And the commodity almanac too. For a while everyone was playing commodities. You don't hear anyone trading, corn anymore or soybeans, beans in the teens.
Yeah.
Anyway, what did Jeff Hirsch have to say?
Well, he said that historically August is a bad month for the market. And that, from the seasonal patterns that he follows, typically August is not the greatest month. A lot of people say, well, Europe goes on vacation for the whole month and, people are gone with their families and whatever excuse you want to make, the market is definitely selling off. I want to talk to you a little bit. Have you seen the action in Walgreens today?
Well, that's actually the other big story, right? So people aren't talking about individual stocks. They're talking about tax inversions, right? So.
Yeah.
Walgreens is going to they're going to buy the rest of what is it Alliance but They're not going to do the inversion because they're afraid of President Obama because Obama is scaring off companies, especially ones from his native Chicago. So that whole tax inversion trade was fun for a while. Certainly overtook earnings along with the other geopolitical events. But I think the tax inversion thing might be done as well. There's only so many shingles you can put out in Ireland or Holland and claim your multi-billion-dollar company is headquartered at that shingle.
Right. No, they're definitely taking that to heart today. I mean, Dennis and I, my partner, were discussing. I mean, this is just an unprecedented move, and this is a big cap, it's like a GE, one of the biggest stocks, and this thing is just getting lit up like a Christmas tree.
Well, it's also part of this greater thing among retailers. I have been speaking to a lot of people who look at retail names and retail stocks. I mean, Walmart's having problems growing, except for its Walmart. It's e-Walmart. That's been growing very well, their website. Target's having problems. Target's closing down stores. Walgreens is having problems. The bottom line is, you go into these places and they sell so much crap that you don't need. I mean, it's all a matter of Americans just don't need any more crap if you want to, bring it down to that level. And these places just sell a whole lot of crap. And people are buying their stuff online. Most people get their stuff on soap.com is where my wife buys her stuff. It just gets delivered when we need toilet paper or razors. It just gets delivered to our house. So the retailers, especially these major box ones, are in a whole world of hurt because they have a whole lot of square footage they got to deal with. Every now and then you're going to get a nice little pop from a small retailer or a teen retailer that gets hot, but then they get too hot. And you look at Michael Kors, and that's gotten scorched recently. So it's hard being in the retail game, especially with this whole big wave of people buying their crap online.
Yeah, that's an excellent point here. I just want to alert our traders in Walgreens here. We had a 57.54 pre-market low, and that was just a few minutes before the opening bell. We've made a low in the regular session here at 57.77. So if you are leaning on that pre-market low, we're about 23 cents away from that level. So I have to agree with you. When I go into a Walgreens or even like the malls, I'm like, who buys all this stuff? And
I have no idea. The other thing about Walgreens, the front store with Walgreens is always, during flu season. So, don't buy Walgreens stock out of flu season because you go into Walgreens, you buy your flu stuff, and then you get to the register and you'll buy your People magazine and maybe a score bar. But the bottom line is, people don't talk about Walgreens unless it's flu season, and now they're doing this deal. They're not even getting the tax inversion. So.
yeah,
I don't know. That's the other thing, which is stealing a lot of time from earnings season. Earnings season is done. I mean, everyone's already forgotten about it because people are talking about inversions and Gaza and that kind of stuff.
yeah, there's a lot going on. Well, Greg, thanks for coming on. It's great to hear about your movie. We definitely like to have you on again and hear the progress about that, and appreciate your take on the markets. So we're going to let you go, and we'll have you on again soon.
All right, you're the man. Hit it hard.
Okay, thanks.